right? Your why is going to determine the type of investments you make, right? Your risk level comes from your why. I could put investment type up there. Okay. So you'll see a lot of things come from your why. When I say this, right, let me put into a real example. Somebody watching this might be investing in the market just so that they have a long term account for retirement. That's what most people do with their 401k, their IRAs, right? It's, I want to have some money set aside for when I retire so I can pull some money now and again out of this account. Somebody else might be sitting on here saying, man, I want to day trade and be a millionaire day trader and drive the Lamborghinis. That might be your why, right? But somebody who's trying to build a long-term account for retirement and somebody who's trying to day trade their way to riches and Lamborghinis, all these things are going to be different, right? The approach is going to be different. The risk is going to be different. The education necessary to be successful in that is going to be different, right? So it's tons of whys. Whatever your why is starts to shape it. Okay, so think about, right, with me, my thing was originally it was long-term investing. I got introduced to stocks not into when there was all the crazy stuff with GameStop and AMC. I got introduced to it in a simple old, you put money in and over time you get the right companies and, over time you build up and when you're 60, 70, whatever the case is, 50, you have $1 million or whatever, right? So that's where I started. And then once I went to college, I got a couple student loans. Then I was like, crap, man, I need to make some money, pay these loans off. Okay, so I'm doing these stocks, started trading options, right? But my why shifted, right? So when I was focused on the long term, then that was just me putting in a little bit of money, every here and there maybe, and letting it grow, right? My risk was, it was pretty low risk because I really wasn't tripping on anything. It was just kind of a long term thing. Also, no, I'm very informal. Anyway, so I wasn't really tripping on anything. It was low risk. I'm like, okay, I'm just putting money in here. Apple, Micron Technology. I was finding different stocks that seemed like they had good potential long term. And then the type of investments, right? I wasn't choosing penny stocks, for example, right? I wasn't choosing random stocks that just popped up and have a bunch of hype in them. I was choosing stocks that had a good history, had good financials. All of those things were in order because I was looking for the long term. Now, when I switched and I was like, crap, man, I got to get some money for these student loans, then I started putting in more money into the market because, of course, if you have $100 versus $1,000, if you make the same trade, the person with $1,000 is going to have a bigger return as far as cash, right? So I started putting more money in the market. My risk went up a little bit because I wanted to get a higher reward, right? And so it's kind of with the stock market, typically you'll see the same sort of thing, as risk increases, potential reward increases. Sometimes it depends on what you're doing. But yeah, so I started getting a little more risky. I started playing around with options. I was like, okay, should I try the day trade thing, the swing trading thing, right? Options trading, spreads, all of that, and then the type of investments kind of spurred into it again. Like I said, me trying to or use my investments in trading to build a long-term account and to pay off student loans wasn't, in my mind, wasn't going to come from me putting a bunch of money in random penny stocks and hoping that one of them pops off. That wasn't the plan, right? And so again, if you're somebody who maybe, you might be young and you might live with some people who, right, your expenses might be low, right? You might stay with your parents. Your expenses are super low and, everything's paid for. Then you might have some money to just throw in random stocks and hope something pops off and then you can pay the student loans or whatever, right? So that was my why. That was my type of approach. Okay. When your why might be bills, right? People do this. People get in the market. People trade actively because they want to build passive income. Whether it's for bill money or whether it's for, lifestyle things, right? Your whole thing shifts. You're not trying to, passive income is from dividend investing. You're not in there trying to day trade options contracts on, little penny stocks for passive income. It just doesn't make sense, right? So the thing, I guess you can look at this is once you determine your why, it helps you stay in your lane, which really is more so of, right? is where it helps you focus. Okay? Because if you're focused, then you're going to keep on repeating things. You're going to start to see what's working, what's not working. You know, if you're taking your goals as passive income, you're investing in different dividend stocks, you're seeing which ones work best. You're seeing whether, you know, the ones that give you monthly dividends are giving you better results than the ones that give you quarterly dividends. Whatever it is, right? But you're focused, and your approach is focused, which means your results will be focused as well. All right, so figuring out what your why is, and in the next Saturday sessions, I'll be going over the what's and the hows, and then putting it all together. But the first step isn't, as far as stock trading, it isn't, oh, well, let me go throw money in AMC, or let me go throw $1,000 in a trading account. It's not, let me go find somebody to tell me what to buy, when to buy, right? And it's really not even, let me just go and put a little out there myself and see what happens, right? Trading and investing is psychological, man. All the numbers, all the stocks, everything out there is the exact same for you, for me, for the person sitting next to you, and the person next door to you, right? Everything's the same. But the mentality and the education is what starts separating different people, how they handle risk, how they handle entries and exits, right? That's stuff that you start to develop, and it still relates to your why and what you're doing it for. But that's the first thing. So if you're newer to investing, right, newer into stocks, and this is something I cover in my free beginners course. But if you're newer to investing, newer to stocks, or even if you're not new, but you feel like maybe you've been in it for a year, 2 years, and you kind of just been doing it kind of aimlessly, right? Figure out what your why is. What's the purpose behind what you're doing? Why are you in the market in the first place? And you start figuring out, okay, well, this is my real goal. Then you can start structuring what your approach is and what your strategies and systems are to fit that goal so that you can meet the goal, right? But if you're just in the gym shooting from half court and during a game, you're not trying to win. Right, that's not your goal. Your goal is to look cool. Right? That's your goal, shooting from half court or doing a bunch of dribbles for somebody who knows basketball, right? People out there that always try to dribble too much, their focus isn't winning. Their focus is trying to make somebody fall or trying to look good, right? The person who's out there making plays, setting screens, passing, finding an open man, cutting to the basket, that's the person whose goal is winning, right? So figure out what your why is, figure out what your goal is, and then we'll start to strategize in the next Saturday Live. We'll start strategizing based on whys, you know, what the actual method is, whether it's day trading, whether it's swing trading, whether it's passive income investing, whether it's options trading, right? That can come into the mix depending on what your goals are and what your risk level is, right? Putting that all in full circle. But again, as I kind of wrap this up, if you're new or if you're first starting out, figure out why you're doing it in the first place. Write it down. Tell your friend, tell your cousin, tell your mama, whoever. Tell them why you're doing it, and then figure out exactly what it is. So I'm about to do it, put on the board too, because I'm so serious. I'm so serious, right? Because all I can do, you know, in my positioning is tell you what I wish I did. Because I was the person who I didn't have anybody to mentor me. I didn't have anybody in my family that was just into investing. Right, I'm putting them on. So I was the person who just got out there and I was like, okay, well, let me just try this and let me just do that, and all right, let me go read these books and see if I can learn something there. All right, so I could just tell from my experience what I know works, what I know doesn't work. All right, and I'm telling you, if I could start all over again, I would sit there and I'd structure out, okay, you know, this is my why, right? So like Jordan's why, and I put student loans, which some profits paid for because we planned it out. So I know it works. Student loans, and then the long term, I don't really know what I'm building it for. It might be for the kids. It's just, you got to have a long term regardless, right? But so once you figure out your why, right, write it down. Then, like I said, we'll go over different plans. If you want to talk, I do have free 15-minute calls. You can hit the link in my bio, set up a call. Free courses in the bio. DM me if you have questions. And I know this was quick, but I'll see you next week.